Welcome to The Explainer. Today, we are looking at a truly fascinating market dynamic. The KOSPI slipping 0.5% while Samsung completely splits from its semiconductor peers right ahead of earnings. Let's dive straight into this historic divergence that is literally unfolding right before our eyes. Just look at this number, 12. Foreign investors have officially extended their KOSPI selling streak to 12 consecutive sessions. We're talking about a brutal half-year dumping of 149 trillion won. To put that massive figure into perspective, that's an absolute record. It's running at 6 to 8 times the pace we saw during the deep crisis periods of 2008 and 2020. The capital flight here is just intense. Now, the index actually opened strong today, looking like it might hold up. But man, it didn't last. It suffered a massive 3.4% intraday drop once this heavy automated program selling kicked into high gear. Luckily, retail buyers swooped in near the absolute bottom, grabbing over 2.6 trillion won in net purchases. That heroic effort actually sparked a late-day rebound, helping the KOSPI close down just 0.46%.
So let's look at Section 1, the great chip split between Samsung and SK Hynix.
Right beneath those broader index swings, there's a historic divergence playing out between Korea's two biggest semiconductor heavyweights. Normally, you'd expect Samsung and SK Hynix to trade in perfect lockstep, right? Well, not today. Samsung actually rose 2.8% on explosive earnings anticipation, while its closest rival, SK Hynix, tumbled 3.4% on the exact same day. So what's going on? Basically, two massive forces are colliding head-on here. On one side, you have all this soaring optimism for Samsung's preliminary Q2 results. Analysts are throwing around huge estimates. We're talking an 85 to 90 trillion won operating profit. But on the other side, that bullishness is clashing hard with about 45 trillion won of supply pressure from SK Hynix as they gear up to list their shares on the US NASDAQ. And as you'll see, this absolutely isn't just a two-stock story. The caution around earnings has rippled deep into the entire supply chain. Remember, semiconductor equipment and material makers live and die by the capital spending of these two giants. Because of all this uncertainty, KOSDAQ equipment makers took a brutal hit today. Companies like HSP, they plummeted over 8%. Right now, literally all eyes are locked on Samsung's preliminary numbers dropping tomorrow. The stakes couldn't be clearer. If they print above 85 trillion won, it completely validates today's breakout. But, and this is a big but, if that number comes in closer to 80 trillion won or worse, below it, we are likely looking at a really harsh reversal that could wipe out today's entire late session rebound. Meanwhile, SK Hynix is out there actively draining local liquidity. Today, they kicked off their book building, basically gathering investor demand for their NASDAQ listing, and they're targeting a massive $29 billion deal. Anticipating this, domestic securities firms aggressively dumped 875 billion won of the stock, sucking up huge amounts of market liquidity in the process. Okay, let's pivot to Section 2, the submarine catalyst and Hanwha Ocean's edge. Stepping away from the tech chaos for just a second, the defense sector actually offered a major bright spot today. Hanwha Ocean surged an incredibly impressive 8.6%. Why? It's all about the massive anticipation surrounding Canada's upcoming patrol submarine project contract. We're talking about a program that could bring in up to 12 new submarines, with a total value hovering near a staggering 60 trillion won. And Hanwha brings a very serious competitive edge to the table. They're going head-to-head against Germany, but Hanwha is offering the absolute fastest delivery timeline, promising to deliver the very first sub by 2032. On top of that, they're backed by this robust network of over 80 Canadian industrial partners, which perfectly hits the sweet spot for Canada's strict local economic impact requirements. Finally, let's look at Section 3, hidden signals and institutional flows. If we really want to uncover what's driving all this extreme volatility, we've got to look at the sheer concentration of capital. Check this out. The total program net sell today was exactly 1.38 trillion won. Now, if you look at the combined selling by local desks of just two stocks, Samsung and SK Hynix, it perfectly, and I mean perfectly, mirrors that exact amount. This is a massive red flag, signaling intense algorithmic selling that's laser-targeted at these exact heavyweights. But, honestly, here is the absolute most alarming data point we saw today, the foreign futures hedge ratio. Back on July 2nd, it sat at a nice protective 71.6%. Literally the next day, July 3rd, it plummeted to just 8.3%. And today, it went totally negative, Foreign investors have violently shifted from a hedged, protected retreat straight into naked directional selling. That means they are officially betting on a market drop with zero safety nets.
So as this data evolves at breakneck speed, the buffers are completely gone, and the market is left entirely exposed. Which leaves us with one incredibly critical question. When that opening bell rings tomorrow, will Samsung's massive earnings be enough to catch a falling market, or is this unhedged directional selling going to drag the entire index down with it? Thanks for tuning into The Explainer.